Hello and welcome back to CNBC's Capital Connection. I'm Chloe Cho in Asia.
And I'm Anna Edwards in Europe. David Costa, Dean at Robert Kennedy College, joins us now from the Zurich Bourse to talk about European earnings and also before that to talk about Greece and how that's dominating the trading day. David, thank you very much for coming to talk to us today. It's interesting to see how we saw positive momentum in equity markets on the back of Greece actually activating the window it has with the EU and the IMF, the access to funds it has there. How do you see this restructuring, debt restructuring talk playing out around the European markets? It seems that the bond markets are debating amongst themselves whether restructuring would or would not be a good thing for Greece. But what do you think equity markets would like to see here?
I think equity market in Europe definitely want to see some clarity about the Greek situation. This uncertainty, which is dragging on now for months, is having negative impacts on the market, and I think might even overshadow good news on earnings. So what is important in the Greek situation is to get a solution, to get clarity in whichever way.
And on that front, on the earnings front, David, what are you expecting to see? We've seen some fairly decent earnings coming through so far from European corporates, but of course this week is when we start to get into the meat, if you like, of the earnings story.
Absolutely. So far I've been pleasantly surprised about earnings both in Europe and the United States, so it's a very positive picture. Today we are waiting the result of Deutsche Bank, which to me, banking earnings are particularly crucial because this crisis in 2008 started with banking, and somehow recovery in the banking sector is very positive. It remains to be seen if Deutsche Bank can perform in the current regulatory environment, which might penalize profits in the future. They pledged to reach 10 billion pre-tax profit by next year from a 5 billion of last year. So it remains to be seen how regulation will impact banks like Deutsche Bank, which is now trying also to diversify and enter more into wealth management and retail banking, which seems to be a sector which will be a bit more freed from the regulatory environment, which is gaining momentum also on the light of what happened in the US with Goldman Sachs.
Good morning, David. This is Chloe in Asia. Now, in terms of sectors, you like construction machinery stocks like Caterpillar, of course, came out with very strong numbers yesterday because they benefit from the overall rebound in sales from Asia and Latin America. How are you reading through the news that we're getting out of China? A lot of a lot of curbs, and that's actually creating this overhang over many of these Asian markets that have been driving higher because of this China growth story.
Yes, I think that China and many of the Asian markets may actually be looking for some sort of correction in the short term. So essentially, in the sectors I favor at the moment, there is pharmaceutical generics, which will probably be less affected by what is going on in Asia, and particularly with the pressure on the healthcare sector for cutting spending. Generics will certainly have a good performance, or I think they're going to have a good performance in the future. So I try to get a bit defensive, and I think the Chinese story might be due for a correction in the short term.
What about the personal and household goods sector, David? I know that they've outperformed the broader Stoxx 600 index both this year and on a 3-year basis. Where do they stand to go from here?
I think they stand to go higher with the low volatility, which is exactly what I like in this uncertain environment we have currently in Europe with the Greek situation, but also not knowing how earnings are going to look next quarter. So personal household goods is a pretty broad term on the Stoxx index, which includes not just personal goods, but includes also tobacco company, and beside the personal goods, also some luxury goods. And have been outperforming with lower volatility in the next year, but also in the last 3 and 5 years. So I think it's one of the sectors I would like to have in my portfolio to have lower volatility and still decent gains.
David, thank you very much for joining us today. David Costa, Dean at Robert Kennedy College, joining us from Zurich. Well, let's have a look at